What is up, guys? It's your boy, No Risk, No Premium, back with another episode of the Sunday Sermon. I'm sorry I'm getting to you very late on this Sunday. You had a long, very long, hectic day with both sides of the family, lots of Christmas parties and fun stuff going on. But I did want to get this out to you guys, so I will make this very, very, very short, simple, sweet, and to the point. First off, let's just start to see, look, what kind of economic data do we have coming out here? Go to the U.S. economic calendar. Coming out tomorrow, we have the Home Builders Index. Building permits, housing starts on Tuesday. Okay, on to Wednesday. Excuse me, current account deficit, consumer confidence index. That'll be an interesting one. And existing home sales. So a lot of real estate focused data just off the first 3 days of the week. So will be interesting. Into the jobless claims Thursday. Why are jobless claims important? Obviously, Fed uh, you know, uses their toolbox, quote unquote, around two main things: inflation and the jobs market. Okay. So we want to just make sure we keep our eye on what's going on in the jobs market with them continuing to tighten. Businesses should slow down. And when they slow down, they need to, increase bottom line, top line, or increase bottom line, top line. They do that by decreasing headcount. Usually it's very expensive. Two, hire employees, right? So you'll want to see how that would affect those numbers that can come out on Thursday. Friday, PCE. That will be interesting. Lots of consumer focused stuff, real disposable income, customer spending will be interesting. Then obviously the University of Michigan Consumer Sentiment Index, new home sales as well. So what seems so far is a pretty great week of just economic data and really no no federal speakers this coming week, which doesn't surprise me, guys. This week will be I don't want to say uneventful, but those, things tend to slow down. Market participation usually tends to slow down around this time. So something to just take into account. Us personally will look to probably just be looking for that one or two trades right there in the morning action, the initial balance, right within that first hour, hour and a half. After that will be a lot less, right? And slow it down during these holidays. Focusing on, having a lot of people in our group focus on, being with their families, spending time with their families, not being glued to their screens all throughout these holidays. But we're in an interesting situation because I don't want to say nothing's going to happen in the market. It definitely feels like something's going to happen. Here's what feels like it's going to happen. If you see, the market's really just spent what? It's been an entire almost almost month, right? Actually, entire month above 390. I mean, it just completely based up here. Remember, we spoke about how the market went from having a stage one, stage two breakout, right? So we went from stage one, we accumulated. Stage two was the breakout. Stage three was the distribution up here. Now we're breaking out of this range under 390. We don't get back above 390s, bulls are completely fucked. Simple as that. And if we really don't get back above this 395 to 400, I mean, it's game over. It's game over. Now, no real relief bounce in the last 4 days. You see, it's just been continuous downside selling. Where do we get to? No wonder we bounce off of that candle of the day before, 2 CPI prints ago, when we closed down 374 and gapped up overnight. That was 2 prints ago. So look where we bounced from, literally 381. Go figure. We are now below the 200 MA, below the 20 MA, and below the 50 MA, when just 1 week ago we were above all those. Things change quick. Okay. So what would I be looking for? 100% of a relief bounce. Okay. Where does that come in? You would have thought it happened Friday. Just seemed like end of day squeeze, right? Shorts exiting their positions into the long weekend. I would more so expect it here, right? This will be the completion of the actual gap filled down, because this is where the close of the candle was. So we open the next day, right? So into this gap, you think it would take us all the way down to this 374. There, I think bulls have to put in a bounce, and they should. That's a level I'd be looking next week. I definitely would want to take a long. I would want to play a reject. Excuse me. Tickle my throat. I would want to play a reject of the 390 area now. I want to see if that could be used as a rejection. If that doesn't, you'd want to see, hey, look, where does this 5 MA open up? And this 821 EMA, you see the yellow and red cross about to happen right here. Remember, we talked about the 5 MA crossing down on the 20. Was seen as a bearish reversal. Okay, you also have this 8 and 21 EMA crossing down here as well. So you'll want to just, hey, Monday morning, let the market open, let it settle, let all these MAs kind of open up and see. But you look, we're below 385. Below 385 is this 50 MA right here. Do you want to see if we get back above that? We could come back and back test this 390 area. That's where I'd be looking to get short. If not, to see where the 5 MA and these EMAs all open up at, which consequently could be right around this 390 area. 392 is a 100-day moving average here, this brownish orange dotted line. So there's two areas, 390, 392, 93, and then 396. I would think 396 would be, 395, 96 would be a major short opportunity. I think we could get it on 390, but I wouldn't put it past them to pop it up a little bit to get everybody bullish for a little, maybe fake out above and then continue to drop it down. Don't forget, we consolidated up here for how long? An entire month. This breakout or break down to the downside won't just last a couple days. There will be a big leg and move out of this. That's why I'm thinking we get at least underneath 380 down to 374. If not 370 underneath it this week. So people talk about tax loss harvesting coming out, big boys selling, maybe advantageous for them exiting a lot of positions after this huge fucking run up. It's all possible. Everything's there formulating for us to have a huge next leg down. Okay, so that's what I'll be looking for. Relief bounce. If it doesn't come here in this overnight action, we're up five handles on ES. Nothing to write home about. You want to see where we open. If we don't, as long as we open above Friday's low, I would look for them to put in a bounce. To think they would maybe take it up a little higher overnight. Let's see. It's all about where we open. But to note, we are underneath now the 200-day, the 20 MA, and the 50 MA, all on the daily chart. Nothing really bullish about that from a technical standpoint. People screaming Santa Claus rally. Charts are not telling me it's there, but we could get a bounce. I would look for it here at this 380, maybe a double bottom from Friday, depending where we open. If we don't open up underneath it, if we do open up underneath it, 100%, I think continuation 374, where there will more than likely be a bounce there. Patience is going to be the name of this game this weekend. So I'm looking at a 374 bounce or a 390, 393 reject where I could take puts to the downside. 374, 370 going to be our bounce levels. Be a reactor there. Be a trader. Okay, leave your bias at the door, right? Guys, get your levels right. Have a plan, but most importantly, don't spend the holiday staring at the screen the whole time, all right? Get in out of your trades in the morning if you can. Enjoy the rest of the day. I know I'm going to be trying to do that. I'm spending a lot of time with the family during these holidays. But don't do anything stupid either. Don't force anything if it's not there. If there's no A1 setup, then no setup, no trade. Simple. Okay, trade plan super simple. 374, 370 relief bounce. I take the call side 390 to 393. I'd be looking to take a short put scalp. Okay, guys, wake up early. Don't do anything stupid. I'll see you guys bright and early. Peace.